In the last video, I couldn't find the net income limitation that applied to Section 179 expensing, but it is here right before and including example 9-13. As I mentioned, you can't take Section 179 deductions in excess of net income. So in this example, they're saying that assume they report $50,000 of taxable income before any 179 deduction. So in that case, in this scenario, this is how that would play out. A piece of machinery from example 9-12 of $900,000 was purchased. The elected 179 expense is $130,000. So the remaining basis is $770 using the normal rates from the table. 7-year property in the first year, you'd get regular maker's depreciation of $110,033. So then that's where the net income limitation comes into play. Only $50,000 would be allowable as a 179 expense. So $50,000 plus the 110 would be $160. That's your normal total depreciation expense for the year. The extra 80 of Section 179 expense that you elected, remember you elected 130, the extra 80 can't be used this year, so it would be carried forward to next year. And if no limitations applied, they could use that $80,000 as an immediate deduction next year. There's another provision that Congress has established to allow for more immediate expensing, basically. They call it bonus depreciation, and it applies to 2008, 9, and I'm pretty sure 10 also. This is a little bit dated, this book, so it doesn't take into account 2010. But anyway, we've got some assets being purchased right here. So what that means is you can take 50% of the assets placed in service as an immediate deduction. So how does that play in with Section 179 immediate expensing then? Assume your qualifying property is $285 from right here. You take the Section 179 deduction first, all right, and you get a remaining basis, and then you take the bonus 50% after that. What this example doesn't show is the fact that you then take the remaining $17,500 of adjusted basis and depreciate that normally using the tables. So the sum of the three things, 179, bonus, and regular, would be added together to get the full total year depreciation expense. You should read a little bit about listed property, deduction limitations, and also luxury automobiles. These items are limited because they've got some personal elements to them, and so the government doesn't allow you to have the normal calculated depreciation amounts for these types of property. Next will be real property.